This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. As always, my name is Alex Perny, and today we are very pleased to welcome on Deb Smith, CEO and founder of CenterCap. And I'm very excited to discuss with her today some of the changing landscape when it comes to the commercial real estate market, especially as it pertains to the retail redevelopment and conversion space. As we've seen a lot, at least, especially, at least in the past 10 years, with the decline of shopping malls and the changing landscape when it comes to retail, and especially post-COVID with a lot of things changing. I mean, everything from what's happening in the office space, which also normally is commingled with retail. There's a lot of different things that are changing, and especially as it comes up and we start to see some market adjustments in the next few years, it's going to be very interesting to dive in and see what are some of the market dynamics that are driving this and where some people can find some returns and some things that can be done to actually continue to invest wisely. So Deb, thank you very much for being on with us today. If you wouldn't mind, give us a little bit of background about yourself and then we'll kind of go from there.
Alex, thanks for having me on the program today. So I've been in investment banking since I graduated college. I career banker. I'm not sure how many of us are left, given my tenure in the space, which is well over 20 years now. But we started up CenterCap Group coming out of the GFC in 2009. We're exclusively focused on the real estate sector, and our services cover M&A, capital raising, and consulting, strategic consulting on how to grow your business.
Fantastic. Yeah, I mean, you say that there's not too many career bankers. There's two of them on this call. I came out of my educational experience and dropped right into investment banking as well, in a very niche industry of just dealing with alternative assets and qualified tax shelters and the like. So, yeah, you're correct. There's not a whole lot of us out there that kind of just step right into it to banking and investment finance, but there are a few of us out there, just like there's a few actual native Floridians like myself. We do exist. We just gotta look for them. So again, it's, I always like to ask people, especially ones that are, very involved in the space when it comes to CRE and a lot of things. It's a very popular asset class for us and our listeners and what we do professionally, to the tune of probably easily over $1 billion of AUM being based in commercial real estate for our clients. So that's kind of where I really want to start, is maybe kind of understanding kind of the position that we're in. We're seeing a lot of things happening with regard to the velocity of money, how people are trying to, refinance deals and what that looks like. I mean, we're seeing a great expansion in the private credit space and the bridge funding space, which is not necessarily good for some people and operators. Certainly does create a new interesting avenue for other investments in those spaces. But as far as what you're seeing, maybe kind of give a primer on, the current state of the market and what you're seeing as far as the operators and how they're adjusting to the current market space.
Yeah, well, look, there's a lot to unpack there. I think, as you know, real estate is a local market business. And so the impact of COVID, the impact post-COVID, the recovery, interest rates, impact different investment classes differently, depending on both the product and as well as where it's located. I think generally speaking, across your four food groups, that each one of those buckets is increasingly becoming bifurcated into niche forms of strategies. I think if we take a class like industrial, we've had spin outs of industrial outdoor storage, we've got cold storage, we've got big bay, we've got micro bay, and there's all kinds of strategies that are now fitting within that bucket. And I think part of that trend is, as interest rates have gone up and as we've seen movement of capital looking for opportunities, that we've become much more focused on serving specific segments of the market with specific products. Once upon a time, it was just industrial. And the same for multifamily. It used to be just multifamily. But now multifamily is manufactured housing. It could be stacker shacks. It could be seniors, active adult living. There's all kinds of bust outs that have happened even within those industries as folks continue to look for ways how to make money in each one of those spaces. So I think that's one trend we've seen, and we call it the rise of the niche products as folks look for alpha across the market. I think in each one of those asset classes on the majors, they've struggled, particularly multifamily, whether it's bottomed out enough. I think it was the one that probably became the most heated. And office has struggled since the GFC. I know folks are talking about it, the challenges in that sector right now, but it's had challenges since the GFC. I'm not sure they're really that new. And so I think you can pick apart each one of the different sectors and ask yourself, where is it? What part of am I focused? Who is my customer? Who's my client base? What's my location? What's the size, the risk profile? And go from there. And the answer will be a little bit different depending on the answers to those questions.
Yeah, no, and that's a really great point that, I think a lot of my guests have, and not for, the lack of, pretty much for lack of a better term, but more or less danced around because the breakout of the niche markets is, again, something that I find very interesting. I've talked to a lot of, over the course of this podcast in my career, talked to a lot of different people that do a lot of really interesting and creative things. And seeing how those things come to fruition is, I mean, for lack of a better term, it is also interesting, but seeing how they make money is really where I find the value in that. So again, to that point of niche markets, let's look at kind of what I wanted to talk to you about today, which is how people are driving those niche markets when it comes to the retail redevelopment space. As you mentioned, the problems that offices had, since the great financial crisis, and also especially that's being, basically gasoline on the fire since post-COVID, which there's some other things that I want to get into with that, but focusing on kind of the retail and the redevelopment space, I don't necessarily know how that changes too much. I mean, if you have a lot of purpose-built stuff, especially when it comes to maybe the strip condo model, maybe some of the stacked models, but that's kind of, again, getting more into the mall space, which I'd be happy to hear your thoughts on. So what are some of the creative ways that people are kind of, getting in and branching into those niche markets when it involves retail?
Yeah, and let me come at that question from a couple of different ways. So on the one hand, we work a lot with corporates who have retail businesses, retail funds, retail clients, retail investors, and we have found a bounce back across the institutional world in terms of increasing interest in retail management and managing chunks of real estate. And I think that resurgence has been coming on for slowly but surely for a period of time here. And in part that is probably driven by the fact that there's been such mass migration in terms of population over the past few years. And if you think through the ramification of changes in demographics and changes in migration patterns, how that impacts every aspect of the retail industry, in fact, every aspect of all real estate, that if people move, they need somewhere to live, somewhere to shop, they need roads, they need transportation, they need last mile logistics, and they need somewhere to work. So that impact is very much widespread. I think there hasn't been a lot also built in the retail space for some time. So there is some resurgence in interest in retail development. But then outside of that, for existing product, I think that, again, it needs to be broken down into different segments. And I think that there's been interest or a preference, rightly or wrongly in preference, for neighborhood type centers or necessity type retail for some time now. And it's been a driver of the interest in that space. So I think that there's continued work to be done there. And so, that's the asset level, and it triangulates into what's going on at the corporate level. So, which is interesting. And then the other trend that you had mentioned, on the repurposing and, what's going on, are there ways to redevelop, repurpose real estate, et cetera. Retail's interesting because if you think about it from office is tough to repurpose, right? If you have a 1980s property in office, we can talk about conversions to multi, but the windows don't open. And the ceilings are too low, and the configurations and the footplates aren't right. And so there's lots of challenges there. Retail, there's a lot of different interesting things. And I'm not sure people have solved what can be done there, but you can think through repurposing retail to last mile logistics. You can repurpose to industrial storage. You could repurpose even to schools or educational facilities. I think there's a lot of options and things that can be done with a retail space that'll all come down to location, where it is, and the different purposes that folks think they can do with that piece of property.
No, absolutely. And you bring up some good points of, just, and I do kind of want to spend some time on the office space because I learned even, I like to, be a lifelong student, and I had an interesting guest yesterday that got into some really interesting additional issues that I hadn't necessarily thought of, and looking at that as well. But as it pertains to kind of the redevelopment on
Mhm.
the retail side, you mentioned a few things that I kind of want to dig into that, again, I hadn't necessarily heard about that I'd like some additional explanation on. So when you mention like neighborhood centers, could you maybe delineate a little bit more on kind of what that means? Because, everyone has a different idea when they think of retail. It could be the main stop in, small town USA. It could be, the urban sprawl in the planned community. But like, as it pertains to kind of what you're seeing on the niche market development, when you say neighborhood centers, kind of what does that look like? Or is it a spectrum?
Yeah, it's all part of necessity retail. It's putting retail where people are. A lot of it ends up being grocery anchored. We've seen strategies that attract interest where it could be a Starbucks and a few stores in local neighborhoods. It could be, which has been very popular. If there's a word I could put for retail in the popular camp, it could be neighborhood centers in terms of grocery anchored. That has always been a stronger part of the retail space for some time. As long as CenterCap's been in existence, that has been the preference in the retail sector. Is aligning with someone that has, local supermarket, and they've got some strip retail that's surrounding it, and then it comes down to the quality of the retail and the quality of their sales within that square foot print.
No, absolutely, and that that definitely kind of makes sense because I've definitely seen a shift, at least just anecdotally from
Yeah.
my two eyes that frame my face driving around, is that we're definitely seeing more of the retail center be kind of large anchor tenant, be it and again, you're right, it's typically going to be some type of grocery center. You're not
Hmm.
really going to see it too much to the extent of maybe like a large box store like a Target.
Hmm.
There might be some development on a few of those pads, but I would say the majority of when I think of new retail is going to have that kind of main anchor tenant. But from that perspective, are there any kind of challenges with dealing with such a large corporate footprint? Because they're going to have, such a rigid structure of what they need and what they need out of that anchor space. The other one's probably being a little bit more fluid. You could have a jewelry shop, you could have, the Starbucks coming, or maybe Starbucks is a bad example, but people that have less demanding kind of, lease out and build out structures as opposed to those tenants. So when you're dealing with that, I'm assuming that's probably kind of a little bit challenging to kind of balance both sides of that scale and their
Yeah.
needs and wants.
Yeah, and I don't disagree with that. And I think what's also interesting now is just the dynamic post-COVID, that's really emphasizing last mile logistics, online purchases, e-commerce, etc. And whether, retail, particularly where you've seen growing parts of on-the-go sections in stores and supermarkets, and even bigger retailers that are carving out sections of their retail footprint to accommodate for pickup and for deliveries and for that last mile element. We're definitely seeing pieces of that pop up as well. And whether it's Kroger or whether it's Dick's, either way, I think that the challenges of COVID and that emphasis on e-commerce, I think is here to stay. I think people love the convenience of delivery. And so that component I think we're going to have to learn to continue to accommodate and to continue to adjust to. And I think the retailers are.
No, and that's a really interesting point you make there. So I would have never necessarily thought that like the last mile component would have really been applicable to something that, again, let's say you have a Kroger or a Publix, but I wouldn't have thought last mile would have really been served very well by, a 4,000 square foot space and kind of a retail like condo strip center. At least in my mind's eye, I'm
Yeah.
thinking, more like, the light industrial box, right? That, you have the drive up bays and everything, but especially as it's been seen with again how last mile logistics has changed, people are subcontracting that out. You see the Amazon driver showing up in their Prius with a vest dropping off
Yeah.
stuff.
Yeah.
Granted, Amazon has their own distro network, but again, that's really interesting. Now, has that been is the last, and what I would think is, and maybe you could speak to this, is that a changing landscape for the last mile people? Did they used to be kind of in the larger, more commercial drive up, tractor trailer bays and are transitioning to this because of a price point differential, or is it more just logistically driven that they can have, for the same amount of dollar spend, have, 7 last mile logistics be able to offer that like 2 hour delivery? What's kind of the driving point between having that logistic aspect be plugged into the retail redevelopment?
Yeah, look, I think it's a combination of things. I think the growth of Amazon, where a consumer now can expect they can go onto Amazon and order something and expect it the same day. I mean, just think about what goes into ordering something online to get it the same day.
Yes.
What's involved in that? That's last mile logistics. That requires, it's not only the infrastructure for it, but it is also the technology that goes behind it. And I think Amazon has changed the world with that. And if you drive around enough outside of even cities, you will see the pop-ups of industrial facilities that are accommodating that. And so the next evolution, if you think about it, is, do you start accommodating for last mile logistics by putting a small micro hubs in parking garages? Do you put them at the back of retail centers or off the offshoot of an industrial warehouse? I think that those have become very interesting and is in somewhat driving the interest on the last mile logistics. If you start Googling a lot, then you'll appreciate the last mile logistics has become a very important component of industrial. And that, I know that was not the case 10 years ago, where we were sitting around the kitchen table talking about getting, if I want a new saucepan, I could get it the same day with Amazon. I can have it there by 6 p.m. Just think what goes into that, and I don't have to leave my chair. And I think there's a lot goes into it, and I think it is changing the world. And I think what happened with COVID is others were forced to step up and make the same accommodation. So Walmart, similarly, Target, similarly. You can go through your list of retailers that now are focused on last mile logistics because they have to deliver and accommodate online shopping. And I think the days of taking 2 weeks to deliver something, it is a harder pill to swallow for the consumer. And I think what throws into that too is the next generation of consumers. I mean, you can make an argument that folks that are seniors are not as familiar with that because they didn't grow up with it. But as the next generation changes and millennials change and move up the food chain, in terms of earnings and in terms of families and in terms of having influence over the economy, I think that that's really impacting it because, we're seeing it in housing. If you think what's going on in the housing sector, the whole movement on what's happened with apartments of amenitized space, smaller footprints, has been driven by demographics. It's the next generation wants something different. And I think retail is experiencing the same thing.
No, and those are really good points, and it also kind of highlights another aspect of it. You mentioned the last mile logistic being a big part of that, but with that comes the additional. Is it necessarily always a need for a larger entity that might actually qualify to be an anchor tenant to transition to more of this style? So, where you fill one side of the scale with one aspect, are you subtracting from the other? So, do you feel that kind of that big push for the last mile portion of it is maybe reducing the amount or the pool of potential anchor tenants for some of these redevelopments?
You can make a case that the jury's out, but what you should see play out is, do retailers retain the same size footprint that they retained before? Do they shrink those footprints down? Do they think differently about where those footprints should be? And do you end up seeing more of on-the-go type for some types of retailers? Do you see more of that? Or do you see a greater emphasis? And I know for sure we're seeing a greater emphasis on quality of websites and quality of being able to buy online. Think through how many retailers are there where you can't buy something online and get it delivered within a week or even a few days. I mean, Dick's, you can order and it's in 2 days. Think how they do that, right? So I think there are consequences of the shift to online. I think the jury's out as to how deep that happens, but I definitely think it is here to stay. I just think the consumer is too focused on convenience and has gotten too used to being an armchair shopper to want to give that up.
Yeah, absolutely. And I mean, it's again, and just kind of thinking critically about it, I see at least, in my current market, we don't have Kroger in Florida. We don't, but they do have last mile logistic delivery, which is very odd. So, it'd be interesting to see how that can kind of play into also the expanse of some of these business, which, outside the scope of like just the look at the CRE on the broader investment scale, you could make the argument saying, hey, look, like it opens up the opportunity for some of these businesses to significantly increase their revenue by being able to offer these kind of last mile options to their bottom lines and what they're actually offering as their services and how they generate revenue. So to scale back a little bit again, to kind of look at some of maybe the critical issues and things that would come about of this, would the inherent utilization maybe change a little bit as well? So thinking about that kind of again at the top down, you have large anchor tenants that maybe are thinking, let's pick on Dick's for example for a second. You have a sporting goods store that has so many things that probably is seeing a larger draw to their online presence. You don't need to necessarily go into the store to pick out the baseball bat you want. Some of those kind of things aren't necessarily needed. So from their perspective, if they have a long-term commercial lease that they're into, are there any type of renegotiations or covenants that might be in place that might be changing to say, look, we have this big space, but allow them to maybe, do transition to more of a master lease where they can start subleasing out their space to help increase their revenues while still maintaining something that maybe is more of a last mile logistic option? Are there things currently that are baked into some of those larger anchor tenants that would prevent that? Or is that something that maybe down the road is something that's going to happen?
Yeah, well, look, I mean, that's the same conversation that you're raising that happens with the office space too, where, and both have this commonality, is that as the demand changes for office space, it's how do you design your spaces in a post-COVID world where you have remote working? And, many firms have not returned to 5 days in the office. And I actually don't, not sure I can think of too many that are a full 5 days in the office. That, how do you accommodate for that as an office, as an officer, as an office lessor or lessee? It's, do you redesign the space? Because why should you have an office there if someone's only going to be in it 2 days a week? But if they're going to be in the office, then you have to have great tech systems if you're going to office share. So you can have two people in that office, but on different days. Or do you have a system where you book tables and you just make it open floor plans and you just do that instead? But in a post-COVID world, people are nervous about open office spaces now. So I think, but they all have long-term leases. So I think the interesting part will be on all of these things that as it rattles through the economy and longer-term leases roll off, how does it change the needs? And whether it's office, industrial, or retail, it's the same. The world continues to change. And as you roll off long-term leases, how do you respond to those changes? And I think what's driven all of it in two is you have shifting demographics, you have people moving around the US, and some markets will decline, other markets are growing. You've had changes in work environments, which, remote's institutionalized now. We've institutionalized online shopping to be able to buy products through there. The test of those boundaries, I think, will continue to move. But in all cases, what's happened is technology has really helped create a level of transparency we've never seen before. And that's what's allowing all of these food groups to develop niche strategies, right? The niche strategies is really an ability to target at a very granular level the needs of who your consumer or who the business is. And we have such transparency into what those trends are that you're able to design products that are specific for those groups, right? So let's just take an example of what you can do with GPS, right? So, and there are plenty of retail managers that have these now compared to, 10 years ago where we didn't have as much, but that they can track with the help of Google where you live, where you go to shop, which store you're in, if you're in a strip mall, which store that you went into, how long you're in that store, when you got in your car, where you went to after you're in that car, did you go home or did you go to another store? So if you think through the implications of that, of those kinds of transparency with analytics, that can help you design your retail center. What you should put in a retail strip center, where you should put it, who's the customer going to be? We used to just focus on population in 1, 2, 3, 5 miles, and we used to just focus on average income. But I think the granularity on those kinds of analysis is much deeper now than it's ever been and much more transparent. And so I think that has implications for not only the risk profile, but also how you underwrite real estate, what your risk really is, since you have such greater transparency, and then the design of the systems and the design of the kinds of stores, locations that you're putting in place.
Yeah, no, absolutely. I think George Orwell would probably have a fit if he kind of saw the granularity in
Google, yeah, turn off your
it.
Google tracking.
Yeah, it's crazy. I've yet to really interview anyone on the data broker side, and in that space. I mean, it's they get a bad rap, and yeah, it's you can make an argument for some of it, but the the ability to again kind of from the business aspect and again that transparency and granularity of information systems as it relates to especially retail on
Yeah.
really tailoring that experience. Just like with anything, it's a give and take. You give up some of that, small privacy, but what do you get? I mean, you get a great experience from the end user. I mean, how nice is it to your point? If you want, a frying pan to sit there and be like, all right, in 2 hours, it's going to be at my door. Or, the some of the ads that are served up to you, like as a reminder, oh yeah, like, and again, I'm a sucker for it sometimes when it comes to some things, and I end up spending my money on things, but that helps to increase revenues for a business, and then they have people to pay and they have families to feed. So is it really such a bad thing? Maybe not the argument for this podcast, but again, it is very interesting to look at from that.
Curated experiences. They're all curated. Everything is curated. I mean, whether you go on Google or if you're on social media, the experiences are all curated. Now, how do they do that? Right?
Yep.
It's and that concept, I think, goes over to every aspect um, of real estate and how it may impact it differently, but the concept is still the same. Of we're getting increasingly better at curating our real estate and offerings to who we want our target universe to be.
Yeah.
And I definitely think that's the case. And, on the multifamily side, we started talking about micro apartments and social amenitized space, many years ago when no one was really doing it. There was one or two players, and many institutions told us we were crazy, that no one would live in a 500 square foot apartment and pay that dollar per square foot. And our argument was, yes, they will, because people don't focus on the dollar per square foot. They focus on what they see in the apartment and what they believe they're getting for the dollar for their money. What is on the property? Where is it? What does it look like? What are the amenities? Right? What's the parking? All these other things that are now become mainstream. 10 years ago, they were not mainstream. And that doesn't mean we don't have 1,200 and 1,500 square foot apartments anymore. But what it does mean is we have greater granularity and transparency at designing units and designing apartments that are designed to meet a specific target. And we can focus on the dollar income because that's who we want of how much they earn. We can focus on whether they have 2 kids or whether they have a dog or whether they're 20 something. We have the capacity to start zeroing in on those things and the design of the product that they're bringing to market.
Yeah, absolutely. And to kind of scale it back a little bit, you're talking about like the operations and making, for the redevelopment play and attractiveness to these tenants, again, quite across quite a broad spectrum. One thing that kind of cropped into my mind is lease structure. To do this, it's not necessarily just kind of, the physical box and footprint of what you have and making it attractive to them. The dollars and cents have to add up, right?
Yeah.
So do you see kind of a transition between maybe a more traditional structure or, what's going on? I mean, I would imagine, especially with the velocity of the way that, tenants might move around now, as opposed to retail, a move away from things like triple net into more of a gross leasing aspect. How at least from the utilization, from the operational standpoint of saying, okay, hey, here's how we can kind of, best, make these things work for people. Because I don't really think it's probably too much of a play on changing the physical footprint too much. I think it's probably more on like the utilization and the offering that you can say, hey, we have this strip center. Okay, we've gotten this tenant in. We have made some minor adjustments, because I'd imagine, with the exception of fast internet, something for last mile logistics, you just need to have 4 walls and a roof for the most part. The systems are kind of built in on the tenant side of things. And if I'm wrong on that, or you see something different, by all means, I'd love to get your thoughts on that.
Yeah, look, I think particularly in the last mile logistics, I think sometimes it's a lot more complicated than it sounds. Particularly if you look at something like cold storage as part of that. You know, cold storage, I don't even think I heard words of cold storage mentioned till 5 years ago. And we published a piece around early 2020 once we started seeing an increase in interest in cold storage. And today it's become one of the very popular niche classes of real estate. But it's a complicated space. It sounds easy. You put up a giant refrigerator or a giant freezer. It's not. Just think through what's involved in keeping as a freezer of that size at the temperature you need. Do you do it for one party? Do you do it for multiple parties? It's tough to do on spec because they're very expensive to build, which is why a lot of spec cold storage hasn't traditionally happened. They're hard to retrofit because it's very expensive to do that. But they're also hard. There's a lot to manage. I mean, in a market where labor is hard to come by, hiring folks that are prepared to go in and out of freezers on a forklift or go in and out of giant refrigerators is similarly challenging. And if you rent these things out to multiple tenants, how does that work? Biotech have different requirements for freezer temperatures than other uses of cold storage for freezer space. Oh, then how do you stack that? If you have a freezer full of, ice cream containers, how do you stack ice cream containers so that you use your facilities efficiently? Not everything stacks in a nice box on a nice pallet. And so how do you accommodate for those things? I think it's very, very challenging. And I think it's a space that's garnered a lot of attention. I think it's operational intensive. And so you have to be aligned with a good operator in order to do it. But it is a space that is definitely niche, and I think there's a lot of interest in it. But a lot of people are very focused on figuring out these elements in order to make the economics work.
Now, would you say that the cold storage space is more of a play for the redevelopment on which asset class? Because I would imagine, at least for speaking on, strip retail, which we've kind of been focusing on the most time, it's, that needs probably a good footprint, whether it be vertically and, and the entire cube needs to expand, right, for that. So would that be something that like is more of a redevelopment play for like light industrial, or maybe getting into office space too? I mean, that could be something where, that could be a redevelopment play for that. So where do you kind of see the cold storage aspect kind of playing into the CRE vertical?
Yeah, we're not. Where we're saying it is, can you redevelop existing product, right? I think the average age of cold storage is old. There hasn't been as much because they're so expensive to build on spec. And institutions, do they really want to commit capital with that much capital and that bigger volume without knowing who the tenants are? This isn't like an apartment building, right? Which if you think about, all apartment buildings are built on spec, right? You're hoping to steal the tenants from across the street. And so cold storage is tough in that regard. But with the increase in last mile logistics and people wanting to go on to, in your case, in Publix and get their ice cream in 2 hours, it's like, well, how do you accommodate for that? And so we are seeing, and then you've seen with the growth of vaccines and with an emphasis on bio, they require freezer temperatures. There's a lot of things that require that, and increasingly so. And when we're focused on getting it to the consumer, regardless of who that consumer is or a business, then we can't have them in one central location in the middle of nowhere. We're moving the product and we're moving the supply chain closer to the end customer. And to do that comes at a cost, and it comes at all these supply chain things that we're talking about. And that's part, we're beginning to hear infra players are becoming focused on these extra aspects and as part of the supply chain because it's essential infrastructure. And so now you're seeing things like cold storage, industrial outdoor storage. I can make the same argument. Are they part of essential infrastructure? Because industrial outdoor storage is about, a lot of times about trucking and is about storing underutilized, it could be even tire facilities, but these become very important parts of the supply chain, is moving them closer to the hubs and not having them go the distances they were historically because it takes too long.
Yeah, no, absolutely. And one of the interesting things I think we're kind of, continually circling around here is just the importance of logistics and supply chain. Before this conversation, again, I'm, as familiar with the next layperson as I am with, logistics and it's important and supply chain as it relates to,
Mhm.
any number of things. But I wouldn't have really thought that logistics and supply chain would have played like in such a massive portion of the driver for some of these redevelopment aspects, especially in retail. I'm just thinking, from the beginning of this conversation, thinking that retail is like, okay, how do we redevelop it to make it more attractive to the, scarcity of, storefront retail that's still available? Again, find that very, very interesting. And so from that aspect of, the last mile logistics, cold storage again, that was a great. I find that I love the small tangents I love to get on, but kind of bringing it back to what we were originally talking about for the redevelopment play from maybe the operational side of things. For non cold storage, for more traditional, let's call it dry goods, whatever that may be, whether it's tires or cans of soup or frying pans,
Mhm.
right? So for that kind of last mile logistics attractiveness to these, retail redevelopment, what do operators kind of need to do, or is it more of a marketing effort? Because again, unless it's something that has a very specific need, again, like cold storage being a very great option, again, I wouldn't think that there's a whole lot there. So maybe is it more of a marketing play for these operators to kind of bring these people in, or is there some type of specific build out that people need to be doing to kind of make this more attractive to those kind of last mile logistic players?
Yeah, I think particularly where there'll be an interesting opportunity, and there is an interesting opportunity, is there's a lot of obsolete mall space, strip centers that is obsolete. They're empty. They're gone beyond their life expectancy, and the question is what you can do with those spaces. And we had touched on a little bit is it's great for are they locationally better served as serving and last mile logistics. I think it's interesting whether they could be converted to schools, where there's an opportunity to make them into medical office, or some other type of use there. But I think the great thing about being in the real estate space is everyone, as an entrepreneur, a real estate investor, looks at a piece of property and asks themselves if they drive past it, well, what can I do with this? Right? The sector is continually reinventing itself, continually. It's the most exciting thing about being in the real estate space exclusively is, even when we went into COVID, folks are talking about the hotel space and they're focused on office and resorts and cruise ships and these things that the industry was struggling. But we as a firm had our best years through that period because entrepreneurs were focused on how to make lemonade out of lemons. And there was plenty to be made. Here we're talking about the last mile logistics. Here we're talking about different forms of apartment living. Here we are looking at reinventing retail and what it can look like in a post-COVID world. But the folks that figured that out do well. And that's the great thing. I mean, the market had become so efficient pre-COVID, and with transparency and pricing had become a very efficient market that with a good dose of uncertainty and a good dose of challenges, this industry is very good at creating new winners and creating losers out of it. And that's how the real estate cycle keeps going round and round and round.
Oh, absolutely. And that's again one of the, it's real estate being a very large, and again, real estate adjacent stuff being a large part of what I've handled in my career. You are absolutely right. With the exception of kind of maybe, the cutting edge startup and the tech and those kind of things being, inherently like new stuff, like, the new thing, right? Real estate really is kind of one of those areas where you get to flex those creative brain muscles, right? Of just saying, hey, like this was that. It's not going away because when you have tangible assets, if something leaves, unlike, maybe like a startup company, it just kind of evaporates into the ether. You have something there that you have to do something with. People
Correct.
aren't just going to be okay with having these large derelict structures sit around forever. And especially for those people that think in dollars and cents and creatively with their dollars and cents, you're going to have a very, interesting renaissance. And to your point of saying, hey, like, it takes a little bit, it takes some uncertainty to drive that, to bring down that comfortability and to increase that creativeness. And again, we see that, time and time again. And as granular and as, I'll call it what is some complex things that we've kind of tackled here today so far. At the high level, it's simple, to understand. It's like, okay, we have something, we need to do something with it. What are we going to do? And go. And we saw that with the economic crisis of 6, 7, and 8. We saw it with the savings and loan crisis. We
Yeah.
saw it the early and mid 90s. And we're seeing it again here in the, mid 2020s of, what's going to necessarily happen with some of this stuff. And especially through COVID, it's really fascinating to kind of look at from that perspective. And, that's what gets me out of bed in the morning, to kind of see what my clients are doing and to help them do it as well. And to kind of, transition a little bit, because whenever I have someone that, is as much of a wealth of knowledge as you are, and especially with so many different aspects, I always, like to bring it back to office, because that's, again, the big question that everyone has. And the more I've been talking about it, and it's really been interesting. And I really think there's going to be something that someone's going to figure out, something that's going to start cracking this open a little bit, because I would say, the writing's really been on the wall for office as a general asset class. Again, painting with an extremely broad brush, for at least the past 2 years. But at least from my perspective, it hasn't been talked about. I will say in the past maybe 4 months, it has been a weekly conversation that I've been having with people. And again, with real estate, when the investors start talking a lot more about it, the solutions get found. And more of the issues that I've been seeing with it is just the reasoning behind some of the issues with redevelopment. I never would have thought, again, like you said, there's no windows. People don't want to live in a jail cell, right? People need more than one outlet. So you have to basically gut and redo the entire electrical. You don't have plumbing. Everyone doesn't want to share a bathroom like a dorm room.
Correct.
Things like that. But one of the most interesting things that I found, and it was just yesterday, I was talking to someone that plays in the self-storage space, but in redevelopment of light industrial and to some into retail, where they go in. And one really interesting example is he went into it was a weapons manufacturer that had been there since like World War One, and they went in. It was in the greater Boston area. The city wanted to do something with it. They were giving them great concessions and really kind of fast track the permitting. But they go in there, they make it into like an A/B class self-storage, and put self-storage in this otherwise just like old gun manufacturer.
Yep.
It's a really kind of interesting thing. And I asked him, I was like, I would, and again, my thought is like, hey, office space seems like a great fit for that. And he goes, you would think, but unless you're doing something that is single level, the foundational structures of these things aren't even sound enough for the amount of like
Correct.
pressure that is going to be exerted on these things. So you have an engineering hurdle that has to be fixed with that, because it's going to be cost prohibitive. Just like, I was thinking, okay, well, you only need one outlet. You don't need windows for self-storage. But he's like, look, you're going to have to go and foundationally underpin these things. And right now it's cost prohibitive until we either get massive concessions from local municipalities for tax write-offs, or we start getting a lot cheaper money coming into the space. So I would ask the question to you.
Yeah.
Kind of what are some of the things that you're seeing, and any creative ways that you're seeing maybe plays going into the future for what's happening in office?
Yeah. Well, let's be clear about something up front. For Class A office and good locations, it's doing great.
Yeah.
There's plenty of office in the US that is doing fabulous. It's good product. It's expensive to rent. It's everything you could possibly want office to be. The challenge is that with the shifts on that have happened post-COVID, particularly around remote, people moving, there's always a debate between suburban and urban office. I think the issue is office is it's expensive, right? It's every time you get a new tenant, you have TIs and LCs. It's costly to run, it's costly to outfit. But office can and has done very, very well. Instead, again, it's local market. But at the same time, I think it's when the office is older, and it's not in the location that folks want office to be. And I think what we're hearing now is, yes, it sounds really cool to be able to repurpose it and do something with it. We're not seeing a whole lot of that at all. I do think that people think there's an increasing words we're hearing around revitalized interest in the space, but it's not by the institutions. It's really by high net worth investors and family offices that have become are paying a lot more attention, is the way I would put it, to the sector, and whether the pricing has decreased enough to make it become an interesting investment opportunity again. And I agree with your comments you said before that it needs some assistance. It'll probably need some assistance from local and from some governmental support or something to help the economics work in order to do something with those properties. But there's a lot of people scratching their heads looking to figure out a solution here. But there's also a lot of really very talented office players that understand this sector, understand their space. And what they're doing is working with lenders and they're working with office owners, because what's a lender going to do with it? Let's just say, that you've got a property and it's below what the debt is, the value is below the debt. I mean, what's a lender going to do with it? They don't know how to run it. And so I think that there is still, for the folks who have the appetite, and the folks with the expertise, they're not afraid of that. They're not afraid of the challenges of office or figuring out something to do with those spaces, or working with lenders or local governments, because that's their DNA. That's what they know how to do. So I think the jury is still out as to what to do with that, but we're not seeing a whole lot of institutional interest, but we are definitely seeing a lot more conversations around, is it time to start taking a longer look at that sector again?
Yeah, and I think from a few different perspectives, and again, you're right. The Class A stuff, is still going to have a need, especially as people transition to smaller footprints. They're going to say, okay, well, we don't need this, condo strip model that we had. Well, let's just take our smaller, maybe more hybrid workforce and stick it in a more Class A place. So again, I think you're definitely right on with that, and I've definitely seen that as it plays out. But to use a kind of a topical example. We here, we do professionally at Advanta IRA. This week we just moved offices, and it was a Seacoast Bank had just closed up a very large footprint here in Pinellas County, and we needed space. But in the old place that we were in, we maintained out of like the 10 units there, 5 of them. And, other than that, I think there might have only been 2 other tenants that were in there. So, our vacancy now creates, there's basically no one left in there. But from that model, in looking at that, as you have people that, you have some people that need to expand, but most people are contracting. So the migration going into that Class A, I think you're right, is pretty well established, and it's not too terribly bleak. But the, kind of the more adjacent like condo model that is more adjacent to kind of what retail is, would be a good transition to that. I think that, at least from what you're saying, might be pretty attractive to bring it full circle to that last mile logistics play. Because especially with what we had, you have 4 adjacent condos. I mean, that's pretty great for last mile logistics if you just need 4 walls and a roof with an internet connection, and ingress and egress to major thoroughfares that's centrally located.
Yeah. And look, if you think about it, from where we started this conversation, it's, when money was free, everyone had a great track record and everyone did really well on deals. What we're really seeing now in our post-COVID world is, the winners and losers, and folks that can figure some of this stuff out. Because the people that can figure out how to navigate through these niches, through big asset classes, where prices are bottoming, what to do with solutions for some of these problems, they'll be the next round of winners. Right, and I know for us, for our firm, where we do a lot of corporate M&A work, or how all this translates in how do corporates make money? How do they create value out of their businesses? It's by figuring some of this stuff out, right? It's about, if I have a product class in retail or housing, how can I create add-on products, and how can I create new ways of doing things to take advantage of all of these opportunities? Because not only do they figure out the solution at the property level, that also has the capacity to translate to value in their business and value in their organizations on a go forward. And that's what's really interesting, is that it's not just about the property. It's, what's in it for the owner, and what's in it for maybe the investor who's invested with the owner. How does that all translate for now as well as into the future?
Yeah, and I think that's a kind of a great point to kind of bring this in for a landing on, is that what we're going through right now, I think, is going to be a healthy dose of antibiotics for the industry as a whole. And to your point, again, the past, relatively, let's just call it the past decade. I mean, granted, COVID was a very big blip, but in the whole, for a lot of investors, I mean, whether you're in traditional markets or real estate, it did nothing except, stick the needle at a 45-degree angle going right. It was hard to lose. And especially in the past 10 years, with the exception of, a few things and some election cycles, it was pretty easy, even if you underwrote a deal, didn't underwrite the deal correctly, to, kind of transition and move and, not really have a big, adjustment to your capital stack, right? And where we're coming in, especially with all the confluence of issues and things that are happening and repositioning of different asset classes and utilizations, especially, I think that's going to be the key, is the utilization aspect. It's really going to be interesting to see where it goes. So again, I really do appreciate your time with us today. If people are interested in kind of learning more about what you have going on, or if you have anything that they can engage with, how can they reach out and find you?
Sure. So we have our website, which is CenterCapGroup.com. And you can also find us on LinkedIn, same thing, CenterCap Group. And you can find me. If you type in Deborah Smith CenterCap, I should pop right up. Feel free to reach out. I check in on both, so I'd love to hear from you.
All right, fantastic, Deborah. Well, again, I really appreciate you with us today. The most valuable asset we all have is our time, because we can't make any more of it, no matter how creative we are with our deal structures and how well we steward capital. So again, I appreciate you taking a few minutes out of your day to talk with us. Again, this has been the Alternative Investing Advantage podcast. My name is Alex Perny, and we appreciate you being with us, and have a great day.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.